Hey everybody, how's everyone doing? This is True Crypto 28 on Twitter, Mr. Anderson to many of you. I spoke to some of my guys in Discord and we were talking about the fact that Bitcoin looked pretty interesting here despite all of the nonsense that crypto has endured recently. We do have some interesting looks and some interesting setups, so I wanted to talk a little bit about the look of accumulation and how that would look how that would look like from a Wyckoff perspective, but also to go a little bit deeper into talking about the distribution side of the story. Also, maybe to dive a little bit into why so many people seem to kind of get this wrong. And I think it's a lot of expectations and more than anything else, and more of bias. We'll get into it though. If I mention something though, this isn't meant to be like Wyckoff teaching process where I'm teaching anyone how to utilize it. In reality, that would be many videos anyway. And there's enough good information on Wyckoff available on the internet. So if I say something or mention a term or anything along those lines that you would like more information on, perhaps you should pause the video at that point, kind of look that up, and help yourself to put yourself in a little bit better situation to understanding it. Okay. I'll go into some of it, but again, it's just going to be more characterized to understand what an accumulation would look like from this point on Bitcoin. I know pretty much everyone seems to think we're going much lower, so it would be a good idea to kind of point out what it would look like if this was in fact the bottom. Okay, so let's just kind of jump into a couple things before we get too close. Basically this is Wyckoff price action cycles, go from accumulations to markups to eventually overbought distribution areas. That supply is greater than demand. Obviously, when demand's greater, price rise. When supply is greater, price falls. Very basic law of Wyckoff. Wyckoff had a very structured way of looking things that allows for consistency. Allowing for consistency in your approach is going to be very beneficial. I'm not telling anyone to become Wyckoffians or anything along those lines, but it is a valuable tool to understand if you start thinking in things such as the character of the market. If you start thinking about things like effort versus result, these can be very helpful to your trading. Because otherwise what tends to happen is you do create natural bias. A natural bias is going to be something that can certainly hurt you. It can cause significant problems. So you'd want to be a little bit more open-minded. Now, this is just a basic schematic of accumulation. Probably everybody's seen this. If not, don't fall in love with the way it looks exactly, because the reality is it's just one form of an accumulation. You can get saucer patterns, double bottom. You can have a falling wedge look to the bottom itself. These accumulation phases come in all shapes and sizes, really. So a lot of that changes, but we will go over some of this to kind of explain some of the key details, but also just to jump ahead as to why so many people seem to go wrong with it. And I'm going to show this, and I hear a lot of people talk about it. I don't know why, right? I guess because everyone has a desire to sound super smart and act as if they kind of invented the stuff, and not as if they've learned it through time and research, etc. But the reality is this. Now let's focus on the schematic for a moment. I want you to pay attention to a couple things: SC, selling climax, automatic rally, all of these different actions coming back for the test here in phase B. And I also want you to look at the comparison of accumulation to its evil twin or its evil cousin, or however you want to look at it, which is redistribution. So a redistribution will actually look a lot like this particular pattern. I think I have it right here. So let me just click here. Yes, okay. So I'll go back and forth real quick. Selling climax, automatic rally, selling climax, automatic rally. The difference is, instead of calling them secondary test here, in the accumulation phase on distribution, they're calling them signs of weakness. Okay, great. But in real time, how do you distinguish with those, right? We might get into that a little bit, but that might be for another video. But the idea here is that you'll see there's a lot of similarities. And a lot of it is timing. How do you label these phases? How do you look at it, etc.? And we might speak a little bit about that as well. That could be its own video too. But regardless, we're going to kind of go into a little bit of that. But you don't really find these things out. And again, for those that don't want to listen to a long video, the reality is the money's made in phase D and E, right? Recognizing that, hey, most of this has occurred, and therefore at those latter stages when we start to see this kind of reaction, that's when you react, right? Pretty simple stuff when you're talking about ranges, but it's the context of the broader range and what then takes place in the later stages that's going to really open your eyes to, oh, okay, this is redistribution versus accumulation, etc. But we'll go deeper, okay? Now, just wanted to point that out though, because I don't ever want to be one of these guys that tells you like, hey, if you look at this pattern right here and all of a sudden it's going to give you some ideas to know that you're 100% in the accumulation, let's go balls to the wall, all in, and we're going to the moon and all these type of nonsense. The reality is all I really want is to develop a little bit of edge. You know, another little piece of edge that I don't know if I'm going to mention during the video, so I might as well mention it now, is as you're going through this process, you'll notice something else. You'll see this part of a phase B in an accumulation. See, sometimes it doesn't matter if you're leaning more accumulation or leaning towards a distribution pattern, because you're recognizing your ability to label some of this and an idea that can put you in a position to say, all right, well, I don't know, was this a secondary test or was it a sign of weakness? And then as you pop back up here on the retest, a lot of you might know just basic price structure and things of that nature for this, but if you were leaning towards something like this to get a better understanding, I want to show you that this phase C part of the distribution versus phase B in the accumulation are extremely similar. And guess what happens to both? Both typically resolve themselves to the downside. So you can get to this point on the chart and it's not going to matter what the end result is weeks down the road in terms of when you resolve the pattern. In the beginning, you just really need an immediate directional bias. And when you're coming up into that range, you're pretty certainly going to head back down for some tests, right? So these are testing action. And then you can find out like, okay, wait a second, after this extended test, am I putting myself into a position to where I'm now seeing that there is some buying coming in play? That's what's going to open your mind to seeing the fact that, oh, okay, wait a second, maybe this isn't redistribution, things like that. But again, we'll jump further into that down the road. Not a big deal. I just like to point out some things that I think are key for people and some of their misunderstanding, because it doesn't really matter what I show you. The key is for you to find a way to review it, process it, understand it, and then let it just marinate with you till it becomes one and you understand it. Does that make sense? So in other words, I could say, hey, this is what a secondary test looks like. Okay, great. Now when you see it, does that mean you're going to know it? No, not necessarily. So the idea here is for you to have an understanding for your own consistency. If you can create consistency, you can give yourself a chance to set rules up for yourself that are going to allow you to create edge. There's no perfection in trading. It's all about edge above all else. All right, so now that we got that out the way, let's just kind of look at a couple different things here. I mean, let me clear the chart one more time. Let's actually delete the chart. And I don't need all of this. Let me turn this market structure off. All right. What's the context, right? Let's start here. What's the context? Well, since 66,000, right, on Discord, on Telegram, we've said one thing, which is what? We're in a downtrend, right? And we're in a downtrend until we're not. That's never been threatened. There was an area here where it got a little bit interesting, but we knew we needed to get above this level. It's been very clean type of action on the higher time frame. There has been no, I mean, for people that want me to point this out, it's okay, well, for market structure point of view, can you break structure there? Then you get up and change a character on the high time frame? No. How about here? Once we did, not even close, didn't even think about it. How about here? Nope, nothing at all, right? Broke down, never even came near it again. How about here? Nope, not at all. Would even have taken this one for some interesting action, but just nothing happened, right? Finally, another breakdown. There we go. So the context is a massive downtrend. So we know that, hey, normally you're assuming continuation, right? That's what we've done. And ultimately, other than some low time frame hiccups, which are going to happen to your trading, sticking with the trend has been a glorious payoff if that's what you did, or a glorious pain if you didn't, because you probably saw and knew it was the case, but still wanted to try to find that bottom or catch that knife. And I understand that. I've been through it myself, but it's painful, right? Let me get a little drink of water here. Sorry about that. So that's painful if you've been trying to fight it, but still the context is what? Severe downtrend. Okay, so that's always important. You need to know what kind of market am I in. We're in a downtrend. So why would I consider this area for the possibility of an accumulation? Well, first off, in an accumulation, you're going to need something that's going to be called the preliminary support. We'll label that here right now. You need a selling climax, and I'll point out some of these in a second. A lot of people, you'll see them put the selling climax here, which is fine. but the idea is just understand that this is the climax. All of this that happened. Why is this part the selling climax? Because you had a spread, right? You're getting bigger losses on higher volume, right? So when you're seeing that, it's like, oh, this is showing some potential for a selling climax. It's not easy actually to see in real time in the beginning, because I understand the fact you're saying, well, that's showing me the biggest spread. Why would I not see the majority of weakness? Well, if you see that much volume come in, that means that somebody, right? Think of it as, like Wyckoff would say, the composite man. And the composite man, that doesn't mean it's one person or one firm. It's more of it's better as a hindsight term. Like when we look back and say, hey, there was a collective that was able to see this and slowly take on significant amount of shares or significant amount of coins, etc., and build a case, right? They built a case for a long-term position. It took supply off, and they were very patient. They were willing to be those buyers when people were desperate. And this would be that time where things are desperate, because no matter how you want to look at it, yes, this was a significant spread, but then eventually you see these levels shrink up, high volume, finally come to a rest there, etc. Right? Now, that's going to create a couple different things. I'm going to go ahead and just label some, and then we'll go back. We can even move the labels. I would put this as your initial automatic rally, and then later we'll put this level as a automatic rally as well. Yes, you can have a couple versions of the automatic rally. Yes, that actually makes a lot of sense, because you're typically going to set a couple levels for your resistance off those anyway. So you have a range that you want to come back to later. When dealing with Wyckoff, I'll explain why I would look at this as part of the automatic rally. I'll also tell you it doesn't really matter, right? It's not so important that you have this here instead of here, etc. And I'll explain that too. Now, if we wanted to look at the possibility of this being phase B, again, doesn't matter right now if that's right or wrong, but this is a possibility for something like that. We'll explain that so that people understand that in a minute. I'm just getting a couple labels here so people understand that this would be a secondary test. The idea of the secondary test is what? You're going to have a retest of the selling climax level, but how are you going to identify that this is not, and by the way, you can have many secondary tests, right? Many tests along the way. But what would make that a test as opposed to a sign of weakness? And typically it's volume related. Now, you really don't want to see the volume even increase too much in these levels. So these are increased volumes, but obviously relative versus the selling climax, they are significantly lower. So this is a test that held, and later a test that held. Now you see what happened here, a little bit of a breakdown, and we will discuss that, right? We're going to discuss that because a lot of people would say, wait a second, that's already a lower low. You can't have that. No. You can have wedge formations absolutely as bottoms, which we'll talk about. But I'm pointing this out for a reason. I'll come back to that, and we don't need too much more right now from this. But I do want to show you a couple different things. And here's what that's going to be based on. Where is this tool? Right here. Okay. So, a couple different things here. So, we're going to look at whether the change of characters or break of structures. Doesn't really matter. This loss here of structure right there, when this level was taken, we've seen this huge, same type of stopping action, by the way, that did take place and held for a while. But from that level to this little level right here, you had a 6% drop. Right? So you had 6% drop. Volume was decent, but not an increase in volume or anything along those lines. And it was just a modest 6% drop. Price held for a couple weeks or so, or close to it. And then we had another break of structure, right? Continuation. Anytime you get continuation, that's your break of structure to this particular low. I would call it here. And now you have this 14% drop, ultimately retest here. By the way, if you want to label it that way, feel free. 17 doesn't really matter. With some higher volume, right? So now you see some higher volumes. You got volume here, you got volume here, and these are your short-term bottoms, right? Local bottoms. All right, well, let's just go ahead and use this level since we went there anyway. And the next time we had a break of structure, look what takes place. 23% thereabout, call it 21, 23, whatever it is. So we're seeing what? A wider spread, right? We went from, in this particular move, we said it was what, like 6, and then to 16, and now to 22%. And guess what? Wider volume. Okay. Now as we came back, I'm labeling this preliminary support. Things tried from here, from this level. But ultimately high volume. And then what happens? No, wasn't going to happen. You had failures in the industry, all kinds of issues that went on. Tesla sold their Bitcoin. I mean, there was just problem after problem after problem, excuse me. And what do you end up getting? Just a cascading event. And if you thought 22% was impressive, we break lows and somehow find our way. Chose the wrong one, my apologies. We find our ways down to what? A 31% drop. And guess what? Expanding volume again. So you're getting, again, increase of volume, increase in spread. And that's my selling climax. Why? Why is that my climax for now? Okay. Well, because something interesting happens. Because over here, you end up in a scenario, right? Now, remember, what matters here is, again, these breaker structures, because how willing, people marry themselves to a range, right? And typically what's happening, I'll keep some of these up for a little while, is that you do get people that say, hey, weak hands that'll buy, right? When this little 6% drop happened, you got some weak hands that came in like, oh, maybe this is the bottom, etc. And guess what happens? As far as start hitting lower, they all sell, and you get an expansion, right? You get an expansion here of the drop, which goes to 16%. Why? Because not only did you have your short-term sellers, you had the new buyers, all these people came in, etc. You had to be forcing, dumping, etc. and margin calls. Say what it is, that's how you got that. It was extensive. Range out for a long time. A lot of new hope is built up in this range. And then when you break structure, remember, I'm taking the break of structure to the new low, right? So when that happens here, again, more people throw in the towel. The weak hands are giving up. 22% drop before what happens? Before some say, no, enough's enough, I'm in a cover, or some people start to build a case, whatever it is. Some people start building long-term positions. Again, regardless, you still farm out some liquidity here again, and then what? Another one. And guess what? More people give up. A lot of people from this area, right? Less buyers supposedly interested in this beginning, right? And you get that further expansion yet again. Again, the effort and the result are matching. The volume is increasing. The expansion of the drop is increasing. But something interesting happened here. Aside from the fact that you would think this was the worst event by far. I mean, 1 million people lost their full account on FTX, right? I was one of them. And you're in a situation to where you have outright scam, negative press, all of these things coming in play. Certainly, it would make a lot of sense for the worst drop to be here. It was the biggest effort, right? You see the volume. And again, some volumes might, some exchanges might show different volume on the BLX right now. That does a decent job. But if anything, I think they were just going to show higher. Most of them are going to show higher volume at that time. And what takes place here? We're going to go from, once again, the break of structure, continuation, to the low. And it was roughly what, 11%? 11%. I mean, how is that the case? Now, look, there are situations, if you go back in time, like something like this, where you did see a low drop. I think we started off on one right here, right? Yeah. So you did see here a small drop on this little break of structure here, but high time frame support was there. It tried to hold. People were hopeful. When it didn't, you had the bigger drop. We get it. Same thing in here. This is why this ranged out for so long. There was a lot of support in here, a lot of people picking this order block versus that one, etc. A lot of long-term history back there. So there's always a possibility that, hey, this is just a good reason to farm out liquidity for a long time. I get it. Now, this one is significant too, right? So, I mean, where we are in this level, we're going back, trying to hold this first level here when you went break a structure, etc. And we're trying to live above it. Maybe that's the case, right? Maybe we see continuation to this downside, redistribution. I'm always open to it. But I still have to call it like I see it. And what I see is significantly more effort without the result. Does it peel off later? Do more give up? If so, we probably see a significant move lower. But you do open the door now for either spring type action, which we've seen some. Spring type action is just what? Context of a downtrend where you try to spring up. Everyone knows a spring in crypto, right? And you basically put yourself in a position to where it's a temporary phenomenon, and you essentially want to see things get retested and see how they handle it, right? Well, ultimately, we're in this situation to where we can be open to that idea. Why? Because of all the things I told you. Now, I'm going to get rid of some of these levels. Well, actually, I can just delete them one by one. And then we'll focus again on our little Wyckoff. But I did want that to make sense to people. Hopefully, I can delete this without you forgetting what we discussed, which is the main element here is the fact that something different certainly happened here from what's been taking place in the past 8 to 10 months. Whereas now the payoff finally did not match. The payoff simply didn't match, right? Now, a lot of interesting things here that we're going to talk about, but the payoff didn't match for now, and that's why I'm going to build a little bit of a case. I don't know if I'll break it down to 2 patterns, because in reality, you could then seek in here and go to a lower time frame and go into another Wyckoff pattern. Perhaps next week I'll get into that, because I'm sure this video is going to be quite long enough already. But ultimately, I do want to show that there's rhyme and reason behind this, right? We're not just picking things up. I haven't said anything. The only thing I said about a bottom, right, was right here. If anyone knows me, anyone's paying attention, I've been saying since 66,000, there has not been a single, from 66,000 on, that there is not a single reason to long, right? And then other than that, I pointed out some low time frame type trades. So that's about it. And then on this particular candle right there, I said, if I was going off sentiment alone, I would say we probably bottomed, right? Sentiment alone, meaning no structure, right? Well, here's the structure now, right? So the structure has to follow. You got an area, say, all right, well, yeah, you bottom. What do I mean by that? Well, if you said that here or here, I would assume you're right? You'd say, yeah, I'm pretty sure we bottomed. Okay, we came in for a little test, break back up. You're back into the trading range here like this, etc., etc. Yeah, I would say anywhere in here, if you call the bottom, you did fine. You were pretty much correct if that was the case. But you still needed to build out that structure afterwards, right? So calling a bottom, who cares? That's just for show. People trying to sound great. The most popular guys in the world are the guys that tell you what? They know something. They know so much. They know it all, right? We're going down for sure. And then they go down and say, see, I knew. And then people start to believe it. Oh, he has a crystal ball. He actually knows. No, he doesn't know. He's just very loud. That's it. There's nothing more to it than that. If you really wanted to help you out, he would never claim anything like that. Now, if it's a joke, I'm all for joking. I like to joke, kid around, laugh, ha ha ha. It's funny. I'm the best. We're the best. You're the best. That's all fun and games. And people that get it right, they deserve credit. Don't ever put anyone down that's getting it right. Look, God bless them. But you are leading people to a bad situation if you're acting like you're creating an environment to where they think it's possible to know. There is no knowing. No one's putting their hand on the line, meaning chop off my hand if I'm wrong. Yeah, right. No one's doing it, right? Reality is we want to find edge, and we can get better with edge. How? We can get consistent in our approach, identify that, hey, in these environments, I want to look for longs and shorts, etc., and have a better chance of utilizing some sound techniques to do that, utilizing risk management all the way through. That's trading, period. The more boring, the more better. Okay, anyway, here we go. Back into this. So why, Mr. A? Why are you doing this? Okay, I'll show you. So here we come into this area. I've showed you why. I showed you why this makes a lot of sense for Sullivan Climax. I got to admit it, it does. If I said anything else, I'd be lying to you. Now, let's get into a little bit of the pattern. How would this look? Well, what you'd want to see here, if this in fact is going to be a bottom, is you want to see some type of action of taking some local action here as to the how and the why. Now, I need that level to be taken, right? It's just a trend line. Do we care so much about diagonals? Not really, just spots of confluence. But what we need to see, and I'll come back after this, is come up, get this level, hold the level before going, something along those lines. Hold the level, never give it back. By the way, I will tell you that there was a trend line that was broken up here. So breaking the trend line by itself doesn't mean anything. It's just one thing you want to see, right? Guess what? A lot of room between here and there. So ultimately, it's a long ways away from that happening. That's just one of the accomplishments that we would like to see. So I'll keep that on for now, or I'll delete and come back. If you don't mind, I'm going to delete the volume. So hopefully you take my word for it and the volume aspects from this point on. I did want to show you that, but it tends to get in the way on the video. And now we'll kind of focus in a little bit more to review this and explain some of this. So back to the basics here. The selling climax is an area where, a lot of people, they think like, oh, selling climax means the low. It does not mean the low at all. Remember, we've already discussed that. We talk about panicky selling. That's the idea. And it's being absorbed, right? If it is an accumulation. Now, I've already told you the other side that, hey, what's this going to look like if it's not accumulation, right? Well, what it'll look like, just to kind of jump ahead a little bit, and I'll jump right back. This will not take this level. We're going to hang south down here for the most part, and then just dump out. That will be the sign of weakness that we discussed, right? We talked about this. So you're going to have this where you say, oh, okay, no, technically we're a little bit more advanced in our process, and we came back to see like, no, this was actually part of the sign of weakness. There's going to be that further markdown. Hey, that can happen. If it is, there's going to be trading opportunities in that range, right? So that's okay. There's been trading opportunities the whole way. That's the interesting part, is people somehow see that as some type of counteraction that can't help you to trade. Well, the context has been down. We want to take high time frame shorts all the way down, and that's still the situation now until it starts to show us something different, right? So what is something different? Well, I've already talked about at least get this trend line. Well, there's a lot of space and a lot of liquidity that can be farmed out beyond that. So the other thing that'll need to happen is this can absolutely still come back down, right? It's very normal to come back and then see the spring, another spring, or the real spring later on, a retest, and that would really show the presence now of what? The positive operator, if that's the case. If someone's willing to now hold after all that time, yes, there's someone that really wants some Bitcoin, and that's the environment. But what happens is, if they've taken enough off, right? So if they started to collect here, and they started to collect here, and they collected heavy here, and they were happy to collect here, right? And again, this can be, when I say composite operator, again, it's not one institution. It could be a collective of people that have the same idea that ultimately win in the end, right? We can go back in hindsight and say, like, no, who were the winners? Well, the winners were the ones that were accumulating. And what did they do? Well, for the most part, they accumulated here and here on this wick, right? And here that on this stopping action, and here on this test, and then on these future tests, if that's the case. So back to a little drawing action, a lot of things can happen. This can certainly bleed out. A lot of it might depend on what else is going on. That would stop in this environment. We would see some form of a spring. It might come back again, and then finally take this level and then hold this level. And then that's when you get up into this action up here, which looks something like that, right? So it's this part that you need to focus on, not all this, because this can come in a few different ways. Now, I'm going to show you. I talked about the fact that, hey, you can have the falling wedge, right? So this is actually a very popular accumulation pattern, which is like this, right? Now, the problem is that people see falling wedge and they think accumulation. No, no, no. Don't think that, right? It doesn't mean that that is. But if you start to see some of the other aspects that are key, which is, let me get rid of this and point out the fact that more than anything else, you still need to see some bullish action taking place, which means what? You want to start seeing higher lows being put in, right? Now, eventually you need to take some structure back, right? That's going to be a key. But to get things going, there's no reason to jump the gun if you're not the composite operator, which you're not, nor am I, right? You don't have to jump the gun other than building long-term positions or, I believe type positions, meaning, hey, I'm going to be in for 5 years anyway, and I believe in the tech, then go for it. But other than that, you want to find some higher lows. And then on a higher low, you might be wrong, and there should be a stop in place there that says, oh, okay, well, I thought that might be the higher low. It wasn't, and go from there. Now, also understand really quickly that a higher low can look like this, right? You can come up here. You can back all the way back down here. And it could hold this particular level, and then at that point begin again to create the continuation of higher lows, right? So that's a possibility of how that can take place. It can go many different ways. You can also put yourself into a position, as I mentioned on the retest, you can also put yourself in a position where, hey, it might decide like, no, supply has come off. There's some element of a catalyst that comes into play. Who knows what it is? And you start to see that type of spring action with some retests. There's so much room. This is a very, very large pattern in terms of Bitcoin. Not for stocks. Stocks tend to go very long. But for Bitcoin, this is a very long pattern, as you could see how things would play out here. And by the way, if this was something that a big composite operator was involved in or multiple collectives were involved in, they're expecting a significant run, right? They're not buying this to sell it here. They're not buying it to sell it there. They're expecting something significant. And, when even in long bear markets, Bitcoin has a habit of throwing one parabolic run at you on a low time frame, right? So people don't realize parabolic from 15,000 is very different than parabolic from 3, right? Remember, we went 3 to 16 back here. Not even here. I'm talking about this one. And this is part of the longer term bear, right? If you go on the weekly scale, but yet you had this type of action once you got going quickly off to what actually no was, what was it, 13.8 back then? Let's see. Yeah, 13.8. So you went from 3 to 13.8 essentially back then. So what would something like that, it doesn't have to be that kind of multiple, but any type of action like that from this level, you still have a pretty significant move. And we know already that, hey, you could break down at this level and still keep a long-term bearish outlook. You can break down at this level, etc. So there's a lot of ways for this to still have to run, have time to pull back, hang out for another year or so before making another bigger action, if that's the case. Now, I don't know what's going to happen. I'm just telling you that any type of major move doesn't mean that you're out of this for years to come. Necessarily, there could be still a long period of time, which we saw COVID related, probably for the most part, but we saw that back here where we had this big move, then this long testing period. Now, many of us might think like, well, maybe we think that this was part of the action that was going to get things going again, and then COVID got involved. I'm okay with that. It's a black swan, but who knows? It doesn't really matter because we'll never know. And it did come back and test an area that seemed like it needed to be tested anyway, but regardless, that's another conversation. So anyway, back to this action. Again, why would we be looking at this way? Well, we can put ourselves in a position here to say that we want to be open for both sides anyway. The short side is pretty easy. See exhaustion on higher time frames, go to a lower time frame, look for reasons to short if they should appear. You should have some systems in place for that. If that happens, you jump on that and kind of ride the wave. Usually it's elevator down, stairs up, right? And that's a good thing. You're putting yourself into a position to where we're going to patiently wait for something to be shown to us, right? Like take the H4 200 and hold it. You know, this, I'm not going to go on H4 here because I'm on the chart that doesn't go to H4, but you know, that's just a basic idea. Like, hey, if I'm really looking to get into some long-term holds, I should be above the H4 200. I'm sorry, people should realize that. If not, make it an integral part of your game to know that, hey, if you plan to hold, you're thinking, I want to hold this for hopefully a week, a month, 2 months, 3 months. Start from a position that's well above the 200. It's bad enough this thing's well below the 200 on the daily, right? So it's got a lot of things to push through to get there. So at least have something in your favor, right? We're talking 21,000 here on the daily. So again, if you're also under that on H4, not good at all. That puts you into a position to where you say, well, I want to have something going my way before I take a very long-term position. Now, does that mean you can't trade on the upside? No, just have a reason to trade to the upside, right? Put yourself into a position where you say, okay, I'm going to think about trading on the upside because of the fact that what? Because I'm in a position now of strength on something. There's some type of match. There's something going on here that puts you into a position that says like, no, it makes sense for me to do this, and then go with that. Okay. All right. Let me finish this up. I don't want to go too long in this. It's just kind of into the possibilities. We already talked about the fact you would have to start building some positive structure here. Maybe this is the beginning. Maybe you saw some spring type action here. Time will tell. This was very organized on the lower time frames. It was extremely organized. We're seeing some good back testing, etc. So one of the keys is right in the very near term, it would be structurally finding a way to battle and hold on all of these tests, right? So anytime you're seeing a test where we fall back, you want to see structure hold pretty well and create some type of what? Higher lows, right? Simple as that. It really is. And then again, for me, something like an H4 200, grabbing that level, holding above it, at least gives you a dynamic support that you should stay above. And if not, well, there's a lot of weakness and you might as well wait. It's not worth what you're going to catch is not then worth it. Okay. Hold on one second, guys. Okay, that was me answering the door for my son mid-video. Sorry about that, guys. Anyway, so hopefully that's understood. Appreciate the guys that have been patient with this. Let me go over a couple more things here to kind of finish this up. Review, selling climax, automatic rally. The automatic rally, you know, a lot of people might say, so what? How do you label that as automatic rally? Well, first of all, this is a 23% move or more. 23%. That's amazing, right? And then I went 40-something% in total. So normally you'll see this. Oh, yeah, I keep grabbing the wrong thing. Forgive me. There we go. 43%. I mean, it's pretty significant. Again, in context, it's only going half of the range. So it's very weak when you look at it from this context. So, you know, according to the actual structure, I'm only coming back to the midpoint at best. Golden ratio 0.618, that kind of thing. At best, which we didn't even get. This, I think, is about the midpoint of the range equilibrium. Great, good for you. So we're not seeing anything from that standpoint, but it's still a 23% bounce in price, right? So yeah, that's an automatic rally. So we did see that eventually went to 40 something percent, and then peel back. Now, a lot of people back here, this is the thing why you don't get involved till the later stages, is that, yeah, you could have looked at this and observed pretty well. They're like, okay, we're in some kind of phase B. But the idea here is that you want to allow the market to tell you or give you some insight as to what's going on, like a cause and effect, right? You want to build the case. You want to see a case being built for the uptrend. And a lot of these, this is why there's different forms of this, will then say, all right, well, I got this low. Even if I put this in as a test, as it was, you then want to see this higher lows being formed, right? And put yourself into a position to where you say, let me take some structure. This was the structure that needed to be taken. You would come up, see some sign of strength up here, and then push on from there with some back test, right? Backing up action, backup tests, etc. As you read up on Wyckoff, you'll see some of that. So that's the idea of how you could study that. And by the way, maybe you did take a shot in here, and it could have worked out if you were early enough, or you got caught. That can happen as well. News-related type events, we get it. Regardless, you would just be wrong if that's the case. But ultimately, it's phase D, phase C type stuff that you really want to be involved in above all else. You know, the idea here is you're putting yourself in. Now, keep in mind, trading range. So I got these levels here. I'm going to try to change colors. Let me give you this one. Actually, I don't have to. I'll just use, let me use this levels here. I'll change the color here. We'll just make them red. Everything else is red. It's probably a bad idea, but we'll do it anyway. Okay, so the majority of your action, you want it to happen in this trading range. Now, obviously, I understand that with this particular, I'm going to change the color on this too. With this particular structure, okay, there you go. Okay, so with this particular structure, you would normally see things confined to the trading range the majority of the time, but they don't have to stay in there, right? You have outliers, you have different reasons, you have head fakes, you have different types of formations that happen that are actually fairly typical, right? So as long as this thing popped back in, was back in the trading range, so be it. Now, short-term structure we'd like to take would be this one here, because now you want to reclaim this zone and then find the time frame where it just doesn't lose it anymore and then get confined back to the previous trading range. Because you have broke structure, had a retest fail, and you're back now in this lower range. Like I said, I would actually like to break this down on the lower time frames and go back into something different, because you could look at this again. We talked about this. Is this going to be a UTAD, meaning up thrust after distribution type of lower time frame range that's building here, or again the same type of thing that can be your action that you would see here in what? A Wyckoff accumulation on the lower time frame. And a lot of times you'll see that when they break down this way, you'll see the lower time frame show the accumulation pattern right into the bigger pattern as well. But what we can see is there's probably a lot of time left on this, right? Which is good. The more time, the better. That's actually a good thing. You're building up ammunition, because they're really just taking supply off the market. So as the supply is coming off, you'll start to see a point to where eventually what ends up really happening is, if this is in fact accumulation, you're going to find out that price can't come down. Well, what do I mean by that? Well, we started to draw a couple things earlier. Well, if we start to make those higher lows, essentially you're also creating a scenario where price struggles. You'll start to see hidden bull divergences, things along those lines, but it struggles to get down even though there's more effort, and it may creep up, and you might see some type of action here that maybe you might even take the level, you see a failure, go, oh wow, it failed, we're in trouble. But it really just tends to hang out here, because you're in a position to where really what's ending up, you got to pay attention to that structure. You're still seeing the higher lows, right? So that can be very tricky ultimately to create that type of structure, and then again just burst off to the top end of that range where you might see the same thing, and then you could call that truly a sign of strength. Now, obviously big range here in the automatic rallies, that's going to happen on such a big structure, but ultimately you do want to take this level and then come back for some test and then run it off from there. But things move different at these sizes. You're in a big, I know this is going to mess everyone up. I've been talking about it for a long time, but you really mess people up when you start talking about $16,000 tags. People are used to $10, $5, 50 cents, different coins that are cheap, etc. Things are going to blow your mind a little bit when they move on this scale. They should have already, right? When you see things drop from 32,000 down to 16,000, dramatic type moves that are happening in a few days time. It's an amazing sight to see. So the same thing will happen if you do start to see some upside reaction, especially if you get past this point, which is going to mess some people up. But it creates from some good trading action, and it creates for some good test. which is ultimately what you want to see. But the point of me bringing that up was that you would put yourself into a position there where you would be able to say, well, ultimately, price isn't able to come down. Even though you'll see some significant moves on some lower time frames, they are still building higher lows, right? Seems basic, right? Guess what? It's supposed to be. It's supposed to be basic. Fall back on the basics in those situations because you need to see that there is a cause and an effect. Someone's building a case. If this is going to turn into a true accumulation pattern of sorts, they better have sold you something, right? And by the way, people talk about manipulation or whatever. Hey, that collective, that's their goal. They want to form that visual sight so that they get the help from retail. They want retail to come in and see it and say, wait a second, there's a case being built here for longs, right? So be part of that part of the process. It's okay, right? Now, still pay attention to your resistance. When resistance resists, obviously you're interested in shorts and things of that nature. But ultimately, you do have to pay attention to where there are signs that are changing. And we do see some of that. Saying anything otherwise would be a false reality. Again, we've already shown you time and time again, redistribution and accumulation. You got the good guy and the ugly cousin here, right? It's ultimately the same blood. They look the same. They have two very different reactions. But it doesn't mean you can't make money off of both. We already talked about how you can make money at this point in both. And then identifying the key here, again, when you get into, do these have phases on it? Oh, yeah, this one has phases on it, right? So you look at something along these lines. Let me go to a color. And, if you look at this right here, you see it's phase A, phase B, phase C, phase D. I won't break them down too much, to be honest with you. But that phase A, doesn't matter how right you are in phase A anyway, but something along this line, say, hey, you came into some preliminary support, you tried to hold off, eventually into a selling climax. We already talked about the fact that you saw a wider spread with higher volume. I showed you the volume on that, etc. So it makes sense. If that was the case, then after this automatic rally, you end up with a situation to where you say, all right, well, this is going to be my phase B. Phase B wants to be building that cause, showing ample test. I'm not going to write them out, right? You're going to say phase, okay, let me see here. How long will that take place? Get these retesting here. See, this is a lot of the stuff of how you're going to look at this. Because now a lot of people say, oh, this is the difference. You want to say, hey, that's a sign of weakness. No, it's not a sign of weakness. It's more testing, right? So it's more testing that got stopped in that situation. Or later, of course, if it goes off to fall off a bridge, well, then, yeah, then you knew it was right. The good thing is we didn't make any judgments. Again, the only judgment we would have made was, hey, yeah, it's a good idea to find some shorts here where they would be, because whether on accumulation or distribution, you're going to put yourself into a position to where you're going to have some weakness in the testing. So you can play this testing zone either way, regardless, without knowing what the end result is, and still know that, hey, we have some bearish action, and then kind of read that. Okay. And then into the later phase C, right? So for that to be the case right now, we would say, like, no, we're in a phase C at this point. Now, what do people say? Well, in that case, in phase C, that's when the smart money is operating, right? That's what everyone's going to tell you. The idea here is you're going to put people in a position to where, yeah, a lot of times you will be below that trading range. That's actually one of the key points here. By the way, I want to show you this. Let me go back. So one of the key points here is that normally you're hanging out here when you're talking about this being a redistribution pattern, right? So that's the one thing that lies in the favor of accumulation at the moment, is that you're not getting that traditional period where you say, okay, again, I told you about the low time frame that you did have a little bit of that look, but you didn't get that big push up. Now, news-related action doesn't have to happen that way. Weakness could be weakness. This could just be dead to the wind. I get it. But instead of putting myself in a bias where I say, no, there's only one answer and it's $12,000 Bitcoin, which might be the ultimate case anyway, I want to be open to the other side and see the signs when they come through. And this is what the sign would look like if it were to occur, right? And the difference would be, instead of making that turn here, you're going to start to build a case with the higher lows that I mentioned. And then you could be on the side that understands, like, wait a second, someone's been building a cause, and that's going to give me the capability to react a little bit better for longs if I need to at that point, and understand that, hey, I might have something cooking here for a little while when in fact that happens, right? Because rallies start very slow, right? You build the case, you start to build some lower highs, etc. But then you realize, like, wait a second, we have all of these people that have gathered, all the buyers during this time are now patient, stronger hands, and they want something bigger, especially the big dogs. who bought significant amounts. They also have to unload significant amounts. So why did I bring this up? If they're truly forming that accumulation, there does need to be a sizable move. Sizable, more than people expect. You heard what I'm saying, right? I want to repeat that so everyone understands. This will move much higher than people realize. Why? Well, because you have significant supply that came off, and those people are not looking to dump at 25,000. It's just not realistic. You didn't start buying here, say, nah, I don't want it here. In fact, they might have contributed to this because they wanted even more. Yeah, let's push it back down. We want more. We need more. We need more, etc. And now there's less gone, and eventually sentiment starts to change, and people start chasing, right? And then when they start chasing, now at that point, that's when you see some of that collective, some of that composite operator type of action where they come in and say, all right, well, okay, now we're making a mega run, I'll dump off, right? You'll see them start to unload because they need time. They need that trading range to come back so they can unload some more. By the way, it doesn't mean they're selling the top, right? It just means they're exiting ultimately in a time where they can spend a few weeks to exit, right? You'll see them dump that down hard, let the public take it back, and then start to bleed their coins in a little bit more, and then kind of come up, put their foot off the gas so they don't crash it down again, right? So that's the same mentality that you want to start to realize when you're looking at these things. And that's pretty much it. I don't want to go too much deeper other than the fact to say, like, hey, if this is the action, then hey, we're in phase C. You like to put yourself in a position to where if you're correct on your analysis, you really want to start saying, like, all right, let's find those sign of strength. That sign of strength is going to be taking some element of structure. So if we want to go a little bit local, I'm not able to go to the lower time frames on this particular chart, so it's not really necessary anyway. If I wanted to go local, what am I looking for? Here we go. If we want to go to the local structure, we see that we broke right there, like this. So what would this look like? You see most of the action is hung out here, and you just want to see that case start to build, right? So what does that mean? Well, I need a break of structure, right? So I need this to show me a higher high from this point. So that would be the first structure I want to take. That's not what I need. We need to take structure literally way up here for the big move, right? For anything that's going to be ultra significant. Now, we're not talking just basic market structure stuff. This would be quite significant. Ultimately, I would put us in a position where we're pretty confident because once you start taking them, they're going to be probably a domino effect here. You might get some testing and make your way up to this level. So even that would be a trade. But I'm just talking about from a Wyckoff standpoint, that is the level that you would need to take for this to show a breaking of this accumulation pattern. That's what I'm looking at that level. But on the local level, we don't need to go that far. Ultimately, we just put ourselves in a level where we've seen some significant supply come in. Yes, it was off the Fed meeting, etc. It doesn't matter. It still happened. Good testing action. This is what we want to see. Holding this order block right there. You see what goes on right there. Nice demand zone. Ultimately, that held at the moment, right? You still have lower levels that can hold. You could still come back in for a test. Composite operator can hold there too. So we already talked about all those options. But regardless, that level right there is the one you want to first see get taken. So it would make sense because that's probably going to coincide, especially with the timeline here, of breaking this horizontal level as well, which would be breaking that wedge. And now that builds what? Confluence. You're back into range. I want to show this really quickly on a weekly level, and then I'll let you guys go. Back into range, back into range is this level here, back into closing range because the closing low was right about there, which was actually what on this chart, 18.4. So you want to live above 18,500 in reality, and then you're going to be playing in this bigger zone here up to 25,000 if that's the case. And that's how that would look like. The last thing I'll point out is that with these big examples like this, I want to be able to go to a weekly, and I want it to make sense as well on the higher time frame. And the reality is it does. We already lined up the volume, but I'll bring it back just in case. You see preliminary support, significant volume, selling climax. You see that expansion of volume. You see further expansion on the volume that we talked about. Just about, we didn't quite get there, but you still see that significant move, much higher than that level. Again, I believe on most exchanges is actually higher here, but regardless, with the stopping action. No, you've now lost, right? This spread, right? So you see higher spread all the way through, and then suddenly the spread is much lower with nearly equal, if not greater volume here. So we still see that working on that weekly in terms of how that looks for, now on the weekly, this one looks more like how you would go ahead and phase this. You got secondary test still back here. You could see things going on, another secondary test, etc. And then you would want to see, again, this particular level get taken would be your first action. You would want to see this level gain on the weekly scale right there. You want to live above this 17.6 level on the weekly. You would like ideally to get back to 18,804 on close on this particular chart on the weekly as well, which again is now going to open you to living in that 18 to 25 type range. And once you take that, yeah, we can actually talk about some fun. And my guess is, again, if we see this, I believe we will see prices that are much more extreme than much people think. Again, what are you talking about? What are you saying? We're in a bear market. It's garbage. The stock market's exploding. I get it. All those things are completely true. And if we dump out, that's fine. That's the normal expectation. I mean, we've been saying since 66,000. I've said nothing other than the fact that there's not a single reason to buy. So now I'm just explaining finally now that we're down at the 15, 16, 17,000 mark of like, okay, if we start to see a couple more steps, we would finally have a cause that we could buy. Okay? Keep your stops tight in that situation. Hopefully you enjoyed some of this. I'm out for now. You guys take care. Merry Christmas.